Hello and welcome to the Weekly Outlook at XM.com. I'm Maria Pachardis, and joining me is investment analyst Marios Hadjikyriacos. We'll be taking a look at the week ahead. So Marios, let's begin with next week's main event, the European Central Bank's policy decision on Thursday. This week, the American, Canadian, and Australian central banks all cut rates to shield their economies from the virus fallout. Do you think the European policymakers will follow suit?
No, I very much doubt it. The markets disagree with me. The markets are pricing in a 90% probability for a rate cut. However, I'm with the economists which think that no rate cut is going to take place. And the argument is this. First of all, monetary policy is not really the right antidote to a supply-side shock like this one. So if your products are not coming in from China, slightly lower interest rates are not going to do much to help you. Now, the second one and the big one is that the ECB is already very divided. So almost half of policymakers, and especially those that represent the big economies like Germany and France, don't see any real value in adding more stimulus. Monetary policy is already extremely accommodative, and they don't want to waste their final, let's say, policy bullets on a problem that monetary policy can't really address. So I think there's going to be a lot of pushback within the ECB about adding more stimulus. Now, what are they likely to do? I think they're going to do something more targeted. So they could introduce a lending scheme that helps businesses that have been affected by the virus. So has your supply chain from China been hit? Are your cash flows drying up? Here's a 0% loan to get you through these difficult times and survive to fight another day. The point is, this is not a real fix. It's a short-term fix. It's more like a bandage on the wound, but it does buy them some time for them to formulate an actual policy response. Now, as far as the euro is concerned, if they don't cut rates like I think they won't, the euro is likely to spike higher on the news. If they do cut rates, since that's more or less fully priced in, any negative reaction in the euro may be very limited. So now, taking a more the bigger picture, I think that the latest gains in the euro, we might see the euro spike higher on the ECB. We might even see it post some more gains over the coming weeks because risk sentiment is likely to stay very fragile. However, in the bigger picture, I'm not optimistic that this is an uptrend in euro dollar, for example. I think that at some point we might see more gains in the euro, but at some point it's going to turn lower. And my thinking is this: both the US and Europe are going to be hit by this virus. But the US economy is starting at a much better point. It's much healthier than the Eurozone is right now. Now, at the same time, US authorities are proactively adding stimulus to negate the impact of this shock. The Fed is cutting rates. They could do some fiscal measures. Now, in the Eurozone, even if they do cut rates, it's going to be cosmetic. It's going to be very slight, and there's very little room for government spending. So I think that this is that at some point euro dollar is going to turn lower again, purely based on economic performance. The US is likely to weather this shock much better than the Eurozone will, and as a final point, the Eurozone might even be facing the risk of a technical recession before long, especially if Italy falls into a recession in this quarter.
Okay, moving on to China now. We'll get export-import data for February over the weekend and inflation data out on Tuesday. What do you think we'll get from this data, and how do you see risk sentiment evolving now that the virus has gone global?
I think they're going to reflect what the PMIs already showed us. The PMIs collapsed to record lows. They showed that a lot of factories stayed closed in February. Consumers became more defensive. Who knows what impact this had on demand? So I think the hard data, the official data, are going to reflect what the PMI showed us. Now, as far as the risk sentiment is concerned, I think it's going to stay fragile, mainly because I'm having trouble imagining what can turn it around. Central banks are already throwing everything they have at the wall. It has managed to stop the losses in stock markets, for example, but it's not lifting stock markets either. So I also think that news flow is going to stay negative over the coming weeks. So, for example, new cases of the virus are most likely going to continue rising, and I think that will keep markets on the defensive overall.
Okay, and finally, regarding the UK, we'll get GDP growth data for January on Wednesday, but perhaps markets are going to focus more on the government's budget, which will also come out on Wednesday. How big do you think that budget will be, and how is the pound likely to react?
Well, how big the budget is really guesswork. I think that the UK government has more incentive to over-deliver, to deliver something quite large. Now, as far as the pound is concerned, we've seen cable recover lately, but that has been mainly due to dollar weakness, not sterling strength. Now, can it continue? I think that the recovery can continue in the very near term. The budget might be quite large, especially given the virus and the risks that has for the UK economy. And at the same time, I think that the markets are overestimating how much the Bank of England will cut rates. The markets are pricing in more than one rate cut for the March meeting, for the late March meeting, which I think is a little over the top. If you listen to what the new governor, Andrew Bailey, had to say recently, he said, yeah, let's take a look at the data first, and then we'll decide if stimulus is needed to counter the virus. The point is, he didn't sound like a man who is about to cut interest rates aggressively. So they might cut rates, but I don't think they're going to over-deliver. So that might boost the pound in the near term. But in the bigger picture, I think that at some point the market starts focusing on the Brexit negotiations and the deadlock that is likely to take place there, the posturing, the drama, and so on. And I think that at some point the pound resumes its downturn.
Marius, thanks so much, and thanks for joining us at XM.com.